Sandra Park, thanks so much for joining me here today.
Hi, thank you. Thank you for having me.
It is my pleasure. Sandra, I think we got connected, I think in the fall of 2023 on LinkedIn. Just one of those happy connections where it looked like we're in pretty similar spaces. And I found your profile. And it's been such a joy to actually watch some of the things that you post on LinkedIn and all that really great content around, you know, um, obviously you're a financial advisor, but just what people can do to get their mindset right around money. And I'm curious, what's the story there? How did you find yourself in this position? Just tell us a little bit about yourself.
Oh, okay. Yes, I'm Sandra Park. I grew up in the Dallas-Fort Worth, Texas area. I'm a single mom. I've been an engineer for over 20 years, and then I started getting really interested in personal finance and teaching myself personal finance back in 2016. And I've been on my own journey ever since. I've become Baby Steps Millionaire and totally debt free and paid off my house. And then I started getting into financial coaching, which is teaching people more about the budgeting aspect of money. So not necessarily the investments and the financial advising part, but then a year or two later after that, I got my financial advising licenses, and now I'm helping people with their investments and financial advice. And yeah, it's been a fun ride ever since. And I think you were talking about fall of last year. That was when I started being active on LinkedIn, posting on there daily, and that's been a fun experience too.
Yeah, good timing, I guess.
Yeah.
So you said Baby Steps Millionaire. So I'm not a huge aficionado in the wealth guru space, but when I hear Baby Steps, I think Dave Ramsey.
Yes, yes, absolutely. It's Dave Ramsey, his seven famous or infamous baby steps, whether you agree with them or disagree with them. But he's coined the term baby steps millionaire, which is a net worth millionaire, which is, assets minus liabilities. And I've also heard the term like a liquid millionaire, which is like you have 1 million in assets. And I've also reached that milestone too, because the baby steps millionaire could include equity in your house, but he's written a book about it, and it's kind of really fascinating because there's just more than you think running around in America. About 1 in 10 people are baby steps millionaires, like your neighbors, people shopping at the same stores, same type of jobs, business owners, all types of
Wow.
people.
Wow. Yeah. So tell me a little more about kind of the journey to getting into that. So, what was it like before finding the baby steps process? And, what was the thing that hooked you into it in the first place?
Oh, yeah. Prior to all that, confusing, very, very confusing. Life was confusing. I didn't understand how I was a, college educated engineer, and I would make money and all the money would be gone at the end of the month. Or I'd do my taxes at the end of the year and realize like, wow, I made that much money and I don't know where any of it is. I have none of it in savings. I was doing a little bit of investing, mostly just because I did 401k, but just realizing like I was just kind of on this hamster wheel where it was like I was working and spending the money and working and spending the money. So I kind of had my, I wouldn't say my I had it moment, but just my I had it realization that this wasn't a good way to live, right? And it didn't matter how much money I made. And I was doing really well in my career and progressing and getting more raises and promotions. And it still just felt the same, that I was check to check, no money at the end of the month. So 2016, I was leaving the company that I'd been at for, ever since I left college. So that was about 15 years of my life. So I don't know why. That was just a rude awakening to like get it together. It wasn't, it was just like, so I also hear this too, when there's a big life transition, it kind of makes you reassess your money. So I think just for me, that was a big life transition, leaving the company I had been at for so long. And it really pushed me into looking into how do I get my finances in order? How do I manage my money? How do I actually grow my investments? Um, and that's why I stumbled upon the Dave Ramsey baby steps. I took Financial Peace University for the very first time. I actually currently teach that class myself. I took it in a church, and I sat there like every Wednesday night, watched the hour and a half long videos, did the workbook with other people in the class, and that just really kicked off learning and actually doing everything. And yeah, just years later. all the stuff really works. It's not like magic, like microwave, like a year later, all your finances will be turned around. But that was definitely the start and the beginning of it. And yeah, so, I don't have this big debt payoff journey. I had a little bit of debt I paid off, but it was more just the realization like I just can't live where I have no idea where my money's going and all of it's gone.
Wow, that's an awesome story and a really emotional journey. Usually, finances are such an emotional journey, and what you said there about it didn't matter how much money I was making. I was getting these raises and promotions, but I still wasn't better off in the net. I see that all the time where your lifestyle or your expenses scale up to your income. So for whatever
Oh,
reason, I don't know if there's like a psychological phenomenon going on where if 2 years ago you were just living off of, let's say, a 50,000 salary, your salary now is 75,000. But for whatever reason, you're not actually saving any more money than you did 2 years ago. There's just something about the lifestyle that scales with your income.
yeah, yeah, absolutely. That hedonic treadmill. And, I would really fight to get a promotion or a raise. And probably about a year, maybe at the most, I would feel like I was in the exact same position as before. And it's just when you don't have any margin in your budget, and you don't have any money for yourself and you're not putting it back into yourself, it just really sucks. And I just remember also, I'd be on social media. I don't do a lot of social media now anymore except for LinkedIn, but back then I was, right. And I would have coworkers because I would also have all these engineer friends, and people would have like these really large houses and be going on all these vacations, and people would be talking about all the places they were eating out at. And I was just like, I don't know how they can have and do it and get all these things. I'm looking back now, I realize some of it was they're doing it on debt, but I didn't know any better. So, but it's just that contentment and having, that envy and comparing myself to others. That was also tough.
Yeah, yeah. And one interesting word that you said there that I don't think I've ever heard used in a financial or personal finance context is margin. People didn't have the margin in their budget. They didn't have margin in their, household economics. And it's so funny because so often, really high income earners, they tend to be, in the business world. They might be an executive, they might even be an accountant, a CFO. Kind of they're responsible for company budget and making sure there's enough margin in the business to keep running, but for whatever reason there's a disconnect when it comes to running their own households.
Yeah, absolutely, absolutely. And then it's funny, even you'll see it amongst engineers, people that plan and are meticulous and take into account risk for a living, right? And then sometimes their personal finances can be a mess.
So they put a particular hat on when they go into work, and then they take the engineering hat off when they go home, and it's okay, well, all bets are off.
Yeah, yeah. But in the beginning, I would feel kind of dumb for not understanding how to do a monthly budget. It just felt so difficult, and also realizing it's so much harder than it's sixth grade math, right? But it's the practice and the habit and the discipline of doing it, and yeah, that was also very eye opening to realize how hard something so simple was.
Simple but not easy, right?
Yes, yes.
Yeah. No, that's great. So I am fascinated because when I talk with financial advisors, insurance producers, very often they had careers or a kind of life before being on that side of the equation, before they started working with people on their personal finances or on their risk management and their insurance products. So you've mentioned a couple of times now engineering background. So now is it right to say that you work primarily with people who are also in engineering roles? Can you tell me about that?
Well, that is my niche that I'm targeting. I can't say currently I have that now because niching down to that niche was pretty recent. So I wouldn't say I have that now, but looking forward, I really do want to work with people, women specifically in the STEM fields, and helping them retire earlier. I think there's just an extra level of kinship. I really understand their concerns and worries, and I think we have some unique struggles, like we were talking about before, being higher than average earners, right? Sometimes being the breadwinner in the families. A lot of these women, just being in stressful male-dominated careers where it may not be feasible, like they want to work the rest of their lives, or maybe in corporate America forever. Um, so there's just different nuances that come along with that field.
Yeah, yeah. Why don't we dig into that a little bit? So, if I'm thinking about, women in STEM and maybe specifically in engineering, you talked about it a little bit with being in mostly male-dominated fields, but what else is it about their circumstances that make their interests and needs maybe a little different from your average financial advisor client?
Okay, yeah, yeah, definitely. They are usually in technically in male-dominated fields. Of course, we're all technical workers, so it's that keeping up with technology all the time, continual learning. They're probably going to get master's degrees, certificates. They're always going to be trying to, pay for maybe expensive trainings that maybe their company doesn't want to do. Um, I mean, in general, I think more of them are going to be W-2 employees than business owners. I'm not saying like 100%, but I think usually it's more lucrative just in our fields to work for a company rather than creating your own company. There's nothing wrong with that, but it's just, there are other niches where they're mostly business owners, right? And these people may not be business owners. They may own a business or start a side hustle, something on the side. So usually, I think the other thing about women in the STEM fields or engineering, they're usually not always thinking of diversifying their income streams. They tend to have one income stream because they make quite a bit from some type of corporate job. But then I'll also see, and you see it now even more now in the news, like just layoffs happen all the time, company mergers, your job's getting taken away. The more you advance in your career, ironically, the more experience you get, the less jobs there are, which is kind of the irony, right? You get more experience, you get more niche down, and then there's even less and less jobs. And they're typically also stressful jobs too. People just look at like we're just really high earners, but they're not easy jobs where you just kind of sit there and tune out. And they're high level thinking jobs. Companies change all the time, industries change. Also, as we're talking about, women are kind of becoming the breadwinners in a lot of these situations for their families. So I think that's unique. And how do they take care of, maybe a demanding career, plus aging parents, plus kids going to college, plus they would maybe want to retire earlier themselves. And also the other unique thing I think about women that have high demanding, careers and they're really intelligent, they're not going to retire and not do anything. They're going to retire to something, and they need to start thinking about that years in advance, right? They're not going to be. I wouldn't say no one's going to be a digital nomad. They're just probably going to retire a bit older and have a different lifestyle where maybe they're still contributing in some way. Maybe they're building a business. I just think all the skills that people have in their career, it just doesn't go away all of a sudden, and they're going to be very sedentary and not doing anything.
Yeah, so it sounds like, first of all, that was fantastic. Thank you for that overview of some of the unique challenges that your niche experiences, women in particular in those STEM fields. To me, when I look for someone to partner with, or a financial advisor, or an insurance producer, what I like from a client perspective is not having to repeat myself or overly explain the situation that I find myself in. So it's reassuring to hear you describing that stuff, because I imagine the people who choose to work with you, you already can save them tons of time in the conversation. You probably already know a lot of those unique needs, and you can just save them the time, energy, and emotional effort to have to explain it in depth all the time. Is that fair to say?
Yes. No, you're absolutely right. Or when people say, I have a boss that doesn't listen to me. Like, I get it. I know because I've been there. Like it's not their imagination or their perception. So certain things like that.
Yeah, no, that's fantastic. And the word you used earlier was kinship, right? Because you've been there, you've done that, you know what's going on. You also know that there's a way out of this trap, the trap that they might be finding
Yes.
themselves in.
Yeah, and kind of that rat race trap and, the struggle for what's the next company that gets the contract or what's the next place. And I'm not saying there's anything wrong with that. You do have to hustle in your career and you do have to be proactive and be looking out for yourself. But it's like, what if you had the money and the security where you had more options where you're like, maybe I don't have to work for the next 6 months. I could take a longer time off, or what if I did pick this other job that was more rewarding, but maybe it pays less? I don't always have to climb the corporate ladder. What if this job that's being offered to me is super, super stressful and going to impact my time with my family and my mental health? And when people have more money, maybe they have the option where I don't have to do that. I could stay where I'm at now, and it's a good balance of where I want to be at, and it supports my family. So it's just helping people think about that instead of just the next job, the next promotion, the next raise, and this is going to fix everything, and more money and more money.
Yeah, no, that's a great story to share because I can see how, as more things happen and as the career progresses, there's probably this feeling that, well, at some point everything is going to sort itself out, but unless you're proactive about it, it doesn't ever really.
No, you're right. Yeah, yeah, you're absolutely right. And I used to feel that too, where it was just like, once I get to the next level, once I get to the next job, or it's kind of that illusion also, like you're trying to look for the perfect job. Like you don't like something about one job, and you're like, if I just went over here, and then something else is wrong over there. And then, yeah.
Yeah. Especially since none of that stuff really ends up impacting your mindset around money, your discipline around budgeting, and how you spend the money that you earn.
Yeah, yeah, and if people could get much smarter about the money that they actually have and how to effectively manage it, that matters more than anything. Because you'll see six-figure earners can blow through their money just as quickly as someone making, 40, $50,000. So it's the dollar amounts change, the mindset, the behavior doesn't, unless they work on it.
Oh, totally. And, I'm reminded, as I shared with you, I'm a big basketball fan. And in the early 2000s, there was this really big scandal, bad publicity thing because a lot of retired NBA players who made 10, 20, 50, sometimes $100 million over the span of their careers, they were going
Mm,
broke. They were going broke after retirement.
I could see that happening. Yeah.
Yeah, in fitness they say you can't outrun a bad diet. So I imagine in finance you can also say that you can't simply just out earn bad spending.
Yes, yes, that's absolutely true. That's absolutely true. And yeah, and then that's a good analogy too. I mean, a bit like athletes, we do have a season where we make a lot, right? But I'll admit, like towards the end of even like an engineering or technical career, the raises and the increases are not so exponential anymore, like compared to like the earlier part of your career. Or you might be like we're talking about, like settling, or there's not that position you want open, or the step up is going to require a big change in lifestyle to your family or amount of stress. So it's just if people could get their money together, then they would have more options, like career wise, family choices, and when they want to retire, if they want to, what they want to retire to. So yeah.
Yeah, that's interesting. Now, I do want to talk a little bit about what your process looks like, or, when somebody chooses to work with someone like you, how do you like to, hold their hand through that journey, right? So let's say, I'm a brand new potential client. I'm sitting down with you for the first time. I'm in this rat race. I'm in engineering. I'm making a decent income, but my finances aren't in order. What is that first conversation, or what do those first couple of conversations look like with you?
Okay, well, first, I like to just learn about the person that I'm going to work with, because I feel for any relationship to start, it has to be organic, and I'm just learning about their goals, their background with money, their feelings and thoughts about money. What is their why? Because people will have these. I have a certain amount of debt I want to pay off, but it's kind of like when people say they want to lose a certain amount of weight. There's a reason. There's a whatever they want to look sexy in their for summertime, or they want to snag another person. It's not just the weight loss, right? So it's same like with money. It's not just these like money goals. There's meanings, and there's feelings, and there's a bigger, deeper why attached behind it. And so in the beginning sessions is really just getting to know them and kind of understanding their whole money system. I tell everyone, even though people say, oh, I don't have any way I budget, I don't, but people have some way they handle money. So I'm trying to figure that out, whether it's like everything goes on credit cards, whether it's they've created the system with like three different bank accounts, whether it's, they pull out money from the ATM machine and they only spend in cash. So I'm trying to learn their money system because even though I have my ideas about how to handle money, I want to cater it to them, something that will be workable for them instead of just saying this is the exact way to do everything. If it just doesn't work in their lifestyle, they're not going to do it. For instance, if you tell like a busy mom to go do cash envelopes and pull out cash, just with a baby, how many times is she going to get her to the bank and do all that? And separating the money out into envelopes, it's just not realistic, right? So I'm trying to learn way more about how they handle their money currently so I can help devise a system or improvements to help them handle their money. And also like setting some goals and some plans for them, something to look forward to. Usually people have such little hope about their money, and trying to provide them some hope, not false hope, but showing them like, hey, if you do this, this is what it could look like in this many years. And these are the type of things that we are kind of working towards. So that's how I like to work with people in the beginning.
That's so interesting because when we think about money and finances, the temptation is to think, well, this is just a rational set of problems. This is just rational. It's totally
Yeah.
logical. We're talking about numbers, it's cold, hard facts. But the more you talk, the more I get the impression that there's a whole lot of emotion that's layered into this. Even the reason why somebody might be unwilling to, or maybe not unwilling, but they might be hesitant to set a hard budget and follow through with it. It's not that they don't understand that they need to intellectually, but it feels like there are emotional reasons why they might not be executing.
Oh, absolutely. Like just the idea that some people say that I don't want a budget telling me how to spend my money, or the fear of understanding their spending. It's the same like any weight loss journey, right? Where everyone knows they should eat less and exercise more. But for some reason they can't. So there are a lot of emotions behind money and why people can or cannot do things. Honestly, a lot of people, they've tried a lot of things and they failed, so they feel like they're failures at it. Like I'm bad at this. I'm bad at money. I don't understand. And helping people understand that no, it's not their fault. And with some help and tweaking and guidance, they could definitely get there. But it's just people have these very similar struggles, right? But they feel like they're the only one struggling.
And I'm wondering if you would allow me to probe a little bit into Sandra's emotional journey into controlling her finances. Did you have any, head trash or mindset stuff, limiting ideas that prevented you in the beginning from approaching budgeting and taking your finances more seriously?
Oh yeah, definitely. I had a lot of stuff. I do think a lot of women grow up with the kind of idea or concept of relying on a man for help with finances. Not that I ever did that so badly, but I would definitely have friends when I would ask them about how they handled their money. They're like, "Oh, I just asked my brother what to invest in, or my dad does my investments, or my boyfriend handles this." So kind of like realizing just honestly, I've also been more independent than other people, I think. So I wouldn't do that necessarily, but it's like, oh, I have to really figure it out on my own. I can't just rely upon someone else, and there would be people I would be dating, and they would tell me how they'd have so much money in savings, and I didn't understand what was the difference. Because it could be like someone I was dating, we made very similar incomes, right? It's like, how do they have so much more money in savings and investments? I have nothing. So something's wrong here, right? We're making very similar incomes, living in the same area. So something's clearly wrong. So kind of also just the mindset like, women can do this, women can learn on their own and take care of their own finances and control their own finances. Some of it was just thinking that I had to know everything about the stock market, because I have to admit, I did have some bad experiences of doing some investing. This is before I became licensed, okay? This is years before I became licensed. And this is one of the huge reasons why I also believe a lot in the, financial advisors. I hired my own financial advisor. That was one of the biggest things I did years ago. And I always had that mindset about saving money and fees, and I can't pay anyone anything extra if I can figure out how to do this on my own. So, like a lot of other women in engineering in this technical fields, they want to be do-it-yourselfers. They want to learn how to do something all on their own and do it themselves. So that was a big step out hiring my own financial advisor, best move ever. I made so much more money compared to me back when I was doing it myself. I did like single stocks, I did stuff on margin. I did a lot of crazy things. I would see something bad in the news and go trade my whole account. I've done the robo, I've done like all of it. So when people ask me, it's like I really know. I'm not just saying just don't do it because I'm a financial advisor. Like I truly believe in having you know, the guidance and where it's not the emotionality where I'm like checking my stocks every single day. Are they up or down? I had this person I can ask and talk to. And I just, as long as my long-term goals and were lining up with how my investments were doing, the day to day didn't matter. Stock market going up and down didn't really matter at all. So yeah, getting past, paying for professional advice. I'll say that.
Sandra, you're really pinching a nerve with me because in my early 20s, I went through a similar experience where I thought like, okay, I'm in my first big boy job. I've got a regular salary coming in. Now's the time to take control of my finances. It's not university anymore. I can't just do everything on credit and go binge
Mm.
drinking on the weekend. So I bought a couple books, I watched a bunch of YouTube, and I was trying to teach myself, okay, I can do this myself. I can manage my own finances. I can move my own money. I can invest in the stock market. I can make the right calls. I'm not an idiot. I understand how to do all this. I can read a financial report. But what I found was I was making decisions and it was like I had to emotionally preserve myself from feeling like I was regretting it because I was on my app every single day, almost hour by hour, checking to see the progress of all the things that I
Oh,
had
me
just done.
too.
Yeah.
The mental energy wasted, right?
Yeah.
Even if you did make money, think about all the time when you're thinking about it, running around in your head, you're checking
All
the
the
app,
time.
you're out with people and you're like, I just got to see how the stock market's doing. And it's just, yeah. And also just removing yourself emotionally from some of these things. Cause that's the other huge benefit I think of a financial advisor. It's a third person that's more neutral and not so emotionally tied to your financial situation that can advise you compared to you where maybe you're looking at your portfolio and you're like, that's that cabin I wanted to buy or something, or that second vacation home.
Totally, and I remember I was doing panic buying and panic selling. So, you'd see some kind of a trend, you get a notification on your phone or read a headline and think, "Oh, I have to jump in on this before it's too late." So, you go and panic buy. But then also you start to see that trend line going a little down for a few days on a particular investment. I've got to get rid of this before it's too late. And so I made the switch myself. So now I have a financial advisor that I work with. And what was really reassuring to me leading up to that decision was I kept reading report after report that even when you factor in those management expenses, like when you have a
Yeah.
financial advisor who's helping you out, people still make I can't remember how much it was, but they still make way more on average than people who do self-directed investing. So when I saw that, I thought, that's pennies on the dollar, and I'll be making way more money by having somebody like Sandra actually take care of this for me.
Oh yeah, yeah, and even beyond the fees, just think about how much mental energy it's freed up, right? Where you're not worrying about your finances day to day to day. But yeah, I kind of learned the tough way, doing a lot of my own bad investing and losing a lot of money for a while, until I realized like I should pay for professional advice, and that was part of the Dave Ramsey baby steps. So yeah, the biggest things was learning the budgeting and then hiring my own financial advisor, and that's why yeah, I'm just super passionate about it because he really saved my butt, my first financial advisor. I would be nowhere close to where I am now without him because I just would have been touching that money. I would have been trading it all the time. I would have been stressed out about it. I would have still been trying to pick single stocks. Yeah.
Yeah, and it's been, to your point, a huge mental relief for me because now instead of checking every single day, I just have an appointment 3, maybe 4 times per year with my financial advisor just to make sure that we're on track, just so I can ask any questions or get an update on what's going on. Or if I'm having a significant life change, now the financial advisor knows what's going on so we can adjust my plan accordingly.
Yeah. Yeah. That's really good because let him do the worrying for you.
Yeah, actually let her do the worrying for me.
Oh, you had a female financial advisor is nice.
Hey, you know what? I just wanted to pick the best person for the job, and she was in front of me, and she was doing well. So why
Okay.
argue with that?
Yeah. Good.
Yeah, no, that's really interesting. So you did say at the start of our conversation here that, of course, investing is one side of it, but there's another side to it as well when it comes to financial advising, and that's helping people with their spending, controlling their expenses, creating a budget, staying true to that. Why don't you tell me a little bit about, maybe the before and after, right? So somebody who's never had a budget before, right? There's obviously emotional reasons why they haven't done it yet, because most people have had the idea of having a budget. So
Yes.
take me through that journey for them, right? So what are they like before they have that budget? What does it look like when they're implementing it and trying to actually get it off the ground? And then what is it like for them and their life once the budget becomes just a regular part of what they do?
Okay. Yeah, in the beginning, usually one of the biggest complaints or reason why people will book a consultation is they'll just say, I have no idea where any of my money's going. They're like, I make whatever X amount of dollars, I make $100,000 a year, no idea where it's going. So one of the biggest huge advantages of doing that budget in the beginning is just awareness of their spending, right? Where is all that money actually going? If it's not accounted for and it's sitting in bank accounts and it's just all getting spent, and it's eye opening because it shows people sometimes. I've had people see that, they spend like over $1,000 on takeout, and it's funny because when you run through an initial budget with people and you're asking people like, how much do you're trying to help set up the initial budget. They'll say like, oh, it's like 600, but until you actually track it, you don't really know. And I always warn everyone in the very beginning, you're going to underestimate all your numbers. Like, it's okay. It's all going to be wrong. They're just educated guesses. We're going to refine and create a real realistic budget. But yeah, so it's gaining that awareness of spending. That's a huge factor. And then also refining that budget every month because it has to be realistic. So what a lot of people do is they'll create a budget and they never look at it the rest of the month. They create it like, January 1st is January, don't revisit it. Maybe at the end of the month, they'll look at maybe the credit card budgeting thing, which is like that pie chart thing that says they spent $1,000 in eating out. And I tell people that's way too late. That's just reacting to money spent. I mean, if you saw that, first of all, you're going to freak out. Second of all, the food has already been eaten. There's nothing you can't return any of that food. So my whole thing is getting way more proactive, planning and being proactive and correcting throughout the month. So let's say, you did a budget review 2 weeks in and you realize you spent, $300 on eating out. You'd have that awareness. And if you had like a $600 budget for eating out, you're like, oh, I got $300 more for the next 2 weeks. So it's just changing that mindset from reacting to all the spending to planning and being intentional about all the spending. And also reminding people it's not about being restrictive and you can't spend your money. It's just decisions. It's intentional decisions. That's all it is. You're deciding where you want all your money to go. So, those months when you're starting out with people, it's tough because it's a big change, right? And some people feel it's restrictive and being reined in. But then after about 3 months or so, if they stick with it, because it's really hard, right? The tracking and reflecting and refining, they'll gain a new awareness of their spending. They'll feel more comfortable paying for large things. I also noticed one of the reasons why people don't pay off credit cards or debt is because they're so uncertain about their finances and money. They don't want to have a big payment coming out of their checking account. But once they actually are budgeting and they get confidence, we're like, okay, let's do $1,000 payment towards this credit card. Let's get this knocked out a little quicker, instead of doing the minimum payment. And it's paying yourself first and knowing where all your money's going. So the transformation at the end, if they make it there, is just this peace. They know where their money's going. They can plan for big purchases. They don't have to rely on credit cards, hopefully, anymore. That they have a system for their money. So it's just that, being able to sleep at night, and I had it too, even though I wasn't like severely in debt. There's just something stressful about knowing you owe people money or you have a big payment coming up. Is there going to be overdraft? Do I have enough money in my bank account? Yeah.
It's unsettling hearing you say this because I'm thinking so much about my own personal finance journey. And I remember when I wasn't in control of my finances, I'm still not 100%. I don't know if anybody ever reaches 100%.
No,
Maybe they
no
do.
one's 100%.
Yeah. But I remember I would kind of flip flop between two different modes when I was spending money. I would flip flop between Oh, it's really painful to spend even another dollar. I don't want to take my wallet out right now, even though this thing is really important to me. But I also flip flop the other way and say, ah, you know what? I'm already in debt. My money situation is already bad. What's another swipe of the credit card this time around? Almost with no real, in between
Oh,
of
that's true.
rationality. Yeah.
Yeah, yeah, and I would go between. It's funny. Maybe I'm the opposite, but I'm actually way too stingy and way too frugal when I don't budget. So to me, if I feel like it gives me freedom where I actually know what I can spend and I feel like I can comfortably spend it. I know that's not the norm. I think most people are overspenders. They're on the other spectrum. But for the people that maybe are oversavers or worry too much, you still get benefits from it. So it just becomes a habit after a while. And I do tell people it's just about continually doing it. And you mess up one day, you start again another day. Every month is a new month to start over. And it's just kind of like flossing to me now. Like, it doesn't take that long. I just check my budget and look at it every day. So that's what I'm trying to get people to eventually, whatever system works for them. If they're not a day by day, or they don't want to budget down to the penny, we can do like different way with maybe like percentages, or if they want to do different bank accounts. So yeah.
Yeah. Now, this is mostly sorry, I'm gonna redo that one. So now, usually when I have folks on these types of conversations, it's typically within the insurance framework or the insurance industry, and I know insurance is at least plays a part in what you do and how you work with people and their finances. I'm curious, from your perspective, what's your insurance philosophy? Like when you're talking to people about their financial plans, how does insurance play a role?
Oh, no, we include insurance. Yeah. And even in the Dave Ramsey Baby Steps, there's an entire lesson where all we do is just talk about insurance coverages, because we talk about how can you build this financial foundation? How can you build all this wealth and you're not protecting it? Like one medical calamity is going to wipe you out, one bad car accident. So we do talk a lot about insurance coverages. That is part of the financial planning. We do check and double check that people have different types of insurances. We tell them to check their coverages, that they have enough amounts. I'm a big believer, and I just reshopped all my insurance. I had to. The rates have gone up a lot here in Texas. I'm gonna be honest. If you know it, well, you're in Canada, but so I reshop all my insurances and check my coverages. The only insurance I sell is life insurance, and we are big believers in term most of the time. Kind of like that, rent the insurance, especially until you get out of debt and until your kids are 18 or older. But I mean, there are cases where like annuities, maybe the other products could work out, IULs. But yeah, we consider that in a person's whole entire financial picture, because there's really no point in doing any of this stuff if a house fire wipes you out. You break a leg, I don't know, someone sues you outside of your property. So yeah, we do like to check on it, even though we don't sell all the types of insurance. We only sell life insurance at my firm. Yeah.
Mhm, mhm. And it's funny to hear you go through that conversation because an analogy or an idea that a lot of life insurance people will use is this idea of, okay, Sandra, let's say you had a machine in your basement, and every month this machine prints out $10,000. So, this machine prints out $10,000, and this machine is able to totally finance your lifestyle, pay for all your bills, send your kids to college, put food on the table. And what would you be willing to invest to make sure that this $10,000 printing machine keeps running every single month, right? What would happen if there was a break in the machine? Would you fix it? Would you do preventative maintenance on it? What are the things that you'd be willing to do to make sure that this machine would be constantly printing the $10,000 every single month? And then usually where this goes is that $10,000 machine, Sandra, is you.
Oh, that's really good. I'm like, I need one of those machines.
You are one of those machines, and your clients are one of those machines.
Oh, yeah, that really helps put it into a good story. Cause yeah, it is a grim discussion to have with people, especially when you're talking to maybe like a healthy 30-year-old couple and they're like newlyweds, and like just even bring up the possibility that one of them could pass away. But no, I'm a big believer in it. I think you do have to financially take care of who is left, in your family. Actually, I just started the estate planning process too. So I'm setting up for all of my stuff because it's just like I was saying, there's no point in building and accumulating all this wealth and assets and then just, it could all be taken away, whatever, because I have a will set up, or
Hmm.
some terrible accident or somebody sues me, Yeah.
So do you work with clients on legacy planning and succession planning and their estate as well? Like what their life looks like once they're no longer here, over and above the life insurance?
Yes, we do include that in the financial planning, but we're not lawyers, so we would help set them up with a resource. We can definitely talk about what it would look like financially, but definitely we don't have the legal expertise. So we like stay in our lane. But yeah, for a big financial planning perspective, yeah, we do talk about legacy, estate stuff, wills and trust and things like that, and which products are appropriate. We just don't necessarily do all of them. We have a reference to like a website that will do like a basic will and trust, but there are times where it's just advantageous to have a lawyer do it too, right? Or you might
Hmm.
have very
Hmm.
specific conditions that you want, written up. Kind of the same discussion, like, there's always an online cheaper version, but then sometimes you do need to talk it through with like a legal professional. It's nice to have them draw it up.
Yeah, yeah, no, those templates and things that you find online, basically, regardless of what the industry or what the problem is, usually they're designed in a way that's for the average person. So they kind of remove all those
Yes.
complexities and curveballs. But it turns out that most of us have at least one or two curveballs.
Yes, they're very cookie cutter. So, I mean, worst case, if you're not gonna pay a professional, yeah, get one of those templated ones. But actually, I just paid a lawyer to do my estate, to build my trust, because I have some intricacies and things I want written in that are very specific. That online one, I actually did pay for an online one. I got a refund because I realized it wouldn't go through and specify all the things I wanted. It was just kind of like a template with these questions, like a questionnaire form, and then it would spit it out at the end.
I think it's great that that's one of the value offers that you have with your clients. It's, we work on the financial plan, and of course, the financial plan will touch on so many related and unrelated things to someone's life. And you stay in your lane, but you're still connected with people so that when that conversation comes up, you can still share resources with the client in front of you. And I think that's so important for us to think about, if we're insurance producers, if we're financial advisors, it's not enough to just pull your client along with the things that you can do for them, but also to set them up for success on all these related things too.
Oh yeah, yeah, kind of building that whole team of expertise. And also, when people want to retire earlier, one of the biggest questions people have is, well, now medical insurance. If I don't have insurance through an employer, and opening up their eyes to there are options. There are actually lots of people that serve these types of situations, or small business owners that can't be part of a group insurance plan, you know. So it's just pointing them to all these things, but not necessarily doing all of it. But yeah, and I think that's the other great thing about coming from a financial coaching background, that we look at like the whole holistic picture of someone's life and their finances. And it includes, insurance, it includes like legacy stuff, estate planning, taxes, everything, money stuff, investments. Yeah.
Mhm. Mhm. I'm really grateful that you shared your story and some of the things that you see with clients, particularly that niche of women in STEM. I do want to ask you though, what are your predictions for the future of, I'll let you tease it in any direction you want, but let's use financial advising as the big concept. And what are your predictions for what that looks like 5, 10, maybe 15 years down the line?
Okay, yeah, we've already had robo advisors for years, and somehow I don't think they've taken over. So I've never truly worried about the robo advisors, and now we have AI coming, right? Or AI's here, and you hear a lot of talk about, well, there could be these automated financial plans. Like, why can't I put all my stuff into? Yeah, you wouldn't put it into ChatGPT because that's your personal financial information, right? But let's say you had one that was more of a secure financial AI type software, and you put in all your information, spit out a financial plan for you. Same like we're talking about with the online, will or trust. it might work for really basic financial situations, right? It will provide this cookie cutter thing. But same like when I was also, I also teach Financial Peace University, the Dave Ramsey Baby Steps. That fits for a lot of people, but then sometimes it doesn't. Sometimes people want to buy a second house. Sometimes they don't have their house paid off in retirement. Sometimes they want to move when they retire. That plan doesn't really take all that into account. So it's all the nuances where I think the human touch won't go away. People will still want to talk to a human. They'll still want to talk through a lot of their feelings and emotions. I've even realized when I work with clients, sometimes I'll say, well, let me hook you up with this software, this template, or let me send you a video. It doesn't matter how many resources you send some people, they still want to talk to you one-on-one, even if it's on video. They still want to get the human answer from you about their financial questions because they can Google things, right? And they can maybe go watch hours and hours of YouTube videos and maybe piecemeal the answer. But I think the future will still always be people will want a human financial advisor, someone they can either meet on video or meet in person, that understands their very unique life and situation and goals and can help tailor advice to that. So, yeah, I don't think it's going to change that much. I hope in the future. I hope in the future. I was reading a stat that 35% of Americans, and this is like a stat a couple of years old, 35% of Americans have a financial advisor, which is like really, really abysmally low, right? That's like a third of the people you know. My hope is that one day it's just as common as anything else, like how everyone has a doctor or a dentist, that people just know they should get one, that they should team up or pair with someone.
Yeah, yeah. Wow, so you took that in a few directions. So you brought up the robo advisor, which has been here for a while, and as someone who used to use one, it was it was a no-brainer to get started, but then you realize that a lot of those emotional drains about managing your own money doesn't go away just because you have a robo advisor. You are still checking on that robot
Yes.
every single day, because that robot can't do the thing that a human can do, which is provide you with that emotional support and that human to human connection. So then you took that idea and then you linked it to AI and having financial plans created by AI after responding to a few prompts. And I thought your answer was really interesting because it touched on that same concept. Even if the AI can produce something that on paper is reasonable, it's logical, it's accounted for all the rational elements of a financial plan, it's still missing something that can't be replaced by it. And it reminded me, so my wife is in healthcare,
Mm.
and she was listening to a podcast, I think last year, where it talked about how in the future, surgeons might be able to create AI avatars of themselves. So the AI avatar will be the way that a patient gets briefed about the surgery before and also talked about the surgery afterwards. So really the surgeon is just the technician, and all the soft skill, all the emotional human stuff is covered by the AI. And my gut response to that was, you know, even if it can technically say all the right things that provide me with good bedside manner and give me confidence about the surgery, there's still something really grotesque about the idea of getting that kind of a support from something that isn't human.
Yeah. I am so shocked. That sounds so off-putting.
It's like bad
Wow.
science fiction. Yeah.
Yeah, yeah, that's crazy. I had no idea. But
Yep.
yeah, there's something about people want to talk to a real human about their problems and even when I'm having money and financial discussions, just because money touches everything in someone's life, it turns into like sometimes like a life discussion. Like they're like, where should I work at next? Or where should I live in the future? What do I do when I retire? These are like bigger things than just like the numbers.
Yep. Yep. And nobody can convince me otherwise that a language model is able to replace that human, call it a soul aspect of talking to another human being. So I think, I would love to believe that your predictions are correct, Sandra.
I mean, same goes for the insurance field because I'm sure people will think like, if we just created all these programs and people answered all the questions, and then they'd be done. They get all their coverages, and yeah.
I talked with a life insurance producer a few weeks back, and one thing that he pointed out to me is that he believes that 2020 and the fallout from switching to virtual is actually going to end up with a lot of errors and emissions claims in the future, because when we do virtual like this and we're not being face to face, somebody might tell me that they're a non-smoker, but if
Mhm.
I visited them at their house or at their business, there's sensory data that you pick up on that you can't through a screen, which is, somebody who smokes smells like cigarettes. They smell like smoke. So even if they tell you to your face that they're a non-smoker, maybe they're thinking like, yeah, I have 1 or 2 cigarettes per week. Like I'm not really a smoker. But you, as the person selling life insurance, that that still counts as being a smoker because there's a long-term risk to their health as a result of that lifestyle thing. So if you just do a virtual app for life insurance, and sure, the prompts might be asking all the right questions, it might funnel to the right next section, but it's not picking up on the sensory data of, hey, this guy's car smells like smoke.
Oh, wow. Wow, that's so true. That's so true. I didn't even think about that. Oh, that's crazy.
And I'm sure there are also instances when you work with clients where they might not think that they're being misleading, or they might not think that they're fibbing, but
Oh, yes.
because like we talked about this entire conversation, there's such an emotional connection to your finances. They might misrepresent something, not because they're trying to, but because they simply don't have the emotional ability to see it plainly right in front of their eyes.
No, that's absolutely true, and there's a huge art to it because it's the question beneath the question, or, when you ask a certain question, if they dodge it, you can tell sometimes, and the excuses, and yeah, you're right. Because how would AI, like,
Pick
maybe
up on
know
that.
or pick up on all that, and sometimes their body language when they're talking and you're watching them through video. Yeah.
Or, if Sandra's booking a meeting with somebody in person, you have a conversation after 20 minutes, they tell you to your face, "No, I never eat out. I never go through drive-throughs. I never do fast food." But when they met you in the first place, they walk in with a big Starbucks coffee.
Oh, no, you're so right, because it's funny, I'll be talking to people about their spending, and I'll sometimes say, like, "What do you think is your area you overspend in?" And I just don't spend. I don't do anything. I don't go anywhere. We don't vacation. And when you're looking through their, bank statements, you're like, "Oh, you spend quite a bit of money." This is telling a totally different story, your money, You can say
Yeah.
you don't do all these things. And it may be some of those cases where people $20 themselves to death. It's a lot of little purchases, but it's like, no, you spend some money.
Or,
Yeah.
they get a text message, they take out their phone, you kinda glance down at it, and you see that their lock screen is a picture of them on vacation with their family last year. They were all in Cancun or whatever, after just telling you, "No, we don't ever do vacations, that couldn't be what's taking all my money."
Oh,
Well,
that's a good one too.
AI is not gonna pick up on the phone screen.
Yeah. So I think there's always going to be a market for these services that require humans. Like, we're not just going to be all taken away. Yeah. I've heard that. I don't know how much you hear that fear with insurance people, but amongst the financial advising community, people fear that sometimes that AI is going to take over and there's going to be no need for us anymore. And I don't fear that.
Yeah, no, it comes up pretty often in the insurance space, particularly the more commoditized product lines like home and auto insurance. I know a lot of companies are already moving to online portals where people can kind of enter all the data themselves or take pictures and upload it themselves. But I think what you're saying is true. There's always going to be a market or a use case where you can't just rely on self reported, self uploaded information.
Yeah. Actually, I just did an insurance quote the other day with someone, and the guy never called me. He just
Mm.
texted. I did an online form. He never actually called. And I was a little put off by that. I was like, he's not going to call, even just to tell me that it's not going to work out or he doesn't have the coverages for me that I was like looking for. I would have appreciated it. Even just a phone call would have been nice. Yeah.
Mm-hmm. Mm-hmm. So, Sandra, where can people learn more about what you're doing, what you're thinking, the advice that you have? Although I know that your content is not specific recommendations, you speak more in the abstract because it requires personal finance conversations personally with people. I follow you on LinkedIn. I'm going to put that up on the screen here. Where else can people learn about you?
Oh, yeah. I'm very active on LinkedIn. I also have a weekly newsletter, and I was telling you about it before. It's been a really fun journey. I was hesitant even about the LinkedIn journey, but I like the newsletter because I can write longer things and it's a little more personal. And I have that newsletter, and I have my company website, and yeah, that's the main places you can find me. But always on
And I think
LinkedIn.
And I think to book a meeting with you, I pulled this up
Oh,
before
yes.
the conversation started here. You've got this fantastic Calendly link. So this is for a free strategy conversation. So if you're listening to this conversation between Sandra and myself right now, and you like some of what she's saying and some about her process, why not take her up? Book a call with her, especially if you're a woman in STEM, particularly in engineering. Sandra has even more value for you.
Yes, yes, absolutely. It's totally free, non-committal, no obligation, and I do try to give people some advice or hope, right? No matter what. So it's just, even if you just want like a sounding board, or you're debating if it's even worth working with a financial advisor, it's not a sales conversation. It's just a get to know you conversation, and hopefully giving people some piece of advice or hope for their situation, whether they work with me or not. Is not important. So it's fun to meet people and have those conversations with them.
Yeah, absolutely. So I would strongly recommend, if you're not following Sandra on LinkedIn, you must do that. Look her up on LinkedIn, it's Sandra Park. You can see the URL on the screen here. Sandra, this has been a super fun hour. I can't believe it flew by so fast.
Yeah, me too. Thank you so much.
We should do this again. Thank you.
Yeah.